Hey gamers and dragons, today we're continuing our Friday, August 1st, 2025 micro replay of MNQ NASDAQ. For those who can't trade during the New York Open, we will be looking at potential trades later in the morning and identifying what a bad entry looks like versus a potentially good entry and exit. On our screen, we have our candles going up. We have a 200 EMA to check for resistance. We have a 50 EMA. We only take longs above, shorts below. And right now, our price is tapping back to our 15-minute cloud. It's dangerous to trade when price is tapped back to the cloud. We're wanting to either wait for a red continuation to go down. We do not want to trade inside the 15-minute cloud. So right now, our price is going up to the 50 EMA. We're going to see if it's going to go above it. Then we can take longs, but it got a rejection, and so it's going back down. Now notice our 5-minute cloud has a green bottom. You don't want to trade red candles on a green bottom cloud. You don't want to trade any candles when price is inside the 15-minute cloud. Notice that our 2-minute is still a green cloud. Okay, see how wicky this is? Our previous trade from our previous video had a descending line that was about like this. So this is not descending. We don't want to trade when the cloud is narrow and skinny and not descending. So it looks like we're going to get some sideways action. So what we had is we had price going down, price coming back up, and now we're going to go a little bit sideways for a while. Now our price is now around 10:45 a.m. Central Time. And notice again, price is going to go up. It's above the 50 MA, but it's at the 50 MA. We don't trust it when price is at the 50 because it always goes up and down through it, and it doesn't necessarily mean that it's changing the trend. So even though we had a green cross over here, you want to be careful assuming that this is going to be a good thing. We want to see that cloud ascending. We just now closed above the 50 MA, but look at this green, red, green, it was red. It's just changing color too much. So it looks like it's going to go sideways again. We have kind of a swing level here. I see it as being too flat, not necessarily something we want to get into. And then plus over here on our 15-minute, it's still a red cloud, but it's sideways. Okay, I'm going to go ahead and pause this, slow it down to normal. Okay, so what we're seeing here is that the green cloud is starting to get red edges and start descending. That's always good. We're still looking for the cloud to have a steep descent. Okay, I'm going to speed this up to 6. Okay, our 2-minute is tapped back to the cloud. Our 15-minute is a green candle, just turned red. We have red Heiken Ashes. We could probably start looking for an entry because it looks like we're going to get a crossover soon of the 9 and 20 EMAs. Okay, so we have a crossover now, and it's starting to get more descending. So I'm going to go ahead and enter this trade. But what I'm going to do is I'm going to pull the stop loss up to our previous target that we had on the other video's trade. I like to pull mine off the edge so that I can put in some trend lines here on the tops of the wicks and make sure that price is still going down. 15-minute is a solid red candle. That's good. Got a red Heiken Ashi over here for the 15-minute. Our 2-minute is red, and our 5-minute Heiken Ashi is red. And it's gone through this swing level here. And we're hoping it closes on the other side of that swing level and doesn't wick out. That's good. Now, if you were shooting for the $100 a day goal, you would have it now. Notice we still have our trend line here. So if price goes up and taps that trend line and continues down, we're good. It's when it breaks out of this trend line that we drew. And I used the line indicator to draw that. Okay, so now this is normal, having a green candle going back up a little bit and then continuing down. The Heiken Ashi filters that out and says, no, red is still in control. But do notice how red had like an equal bottom here, and now it's going down. I'm going to redraw this. Okay, notice our cloud just formed, and it's a good sign because even though this was green, it's still steep, it's still descending. Over here, it's still descending on the 15-minute, still descending on the 2-minute. It's still descending on the Heikin-Ashis. The tops of our Heikin-Ashis are lower each time. They are getting smaller. We got a green one there. We're going to look at this and see, okay, it's going sideways. It is tapping back to the cloud, which is normal. Normally, I will re-enter after a cloud tap as long as everything else is good. But our goal is to have it hit this previous support level from the 8:30 a.m. trade from our last video, again, Central Time. Okay, we're going to go ahead and move our stop loss to break even. I'm going to go ahead and put it on the $100 just so that if you were trading later in the day so that you can get your $100 for the day. But we don't want to close it because we do want to get more if we can. Got this sideways action and we're looking for it to go back down and hit our previous support level.
Target filled.
Whoa, there it went. Target filled. So we got our 273, and notice, let's backtrack and go over this. On our 15-minute, we have a red cloud descending, not as steeply as the 5-minute. Our Heikin-Ashis were red. Heikin-Ashis over here were red going down from our entry over here. Then we were hugging the cloud. We had sideways action, but the Heikin-Ashis were telling us, you know, it's still red here. It's still red here. It's not as steep as the beginning of day trade was on our previous video, but that's okay because we are trading later in the day when the activity doesn't have as much volume and typically as much steepness. Our 2-minute was also going down slowly from here, went sideways a lot, and then back down. We're looking for these crossovers on our cloud, and let me show you what this indicator is that I use. I use the MA Cross Builder, and I'll quickly just scroll down through this to show you my settings. That was our second trade of the day, so that was an example of a bad trade to not take over here on this crossover, and a good trade to take after this crossover. But it wasn't as smooth as our opening trade because we had some sideways activity and there wasn't as much volume. In fact, we ended with a 14 volume, started with a 14 volume. When you're doing trades during the day, you're not going to get as much volume and you're not going to get as much movement. That's it for August 1st, 2025, MNQ Micro. If this were a mini, that would have been a $2,730 trade. But if you're a noob, do not be trading on minis on NASDAQ because the stop loss that we have now that's $100 would have been a $1,000 stop loss. And if you lose $1,000, then sad day. Okay, have a great day. Talk to you later. Bye.